Alrighty guys, what is going up? Welcome back to another episode. In today's video, I want to talk about GameStop. Will this stock hit $500 per share within the next year or so? So for those of you that don't know GameStop is the brick and mortar store that pretty much sells video games, video game consoles, and a variety of other video game memorabilia. Now, over the past year or so, there's been so much volatility with this stock. Whether it's from massive short squeezes, taking over hedge funds, Wall Street bets, pretty solid earnings, changing in the board members. There's been a lot of volatility and honestly, pretty decent growth if you're just looking at the chart as a long-term perspective here. So first, let's break down the chart here. Now, this stock was trading for around $13 to $15 per share, and then it came up and hit around $50 to $45 for a couple of weeks here, and then this stock pretty much went nuclear. This is when the Wall Street bets and all of these hedge funds started covering their shorts, causing a massive short squeeze in this stock, and then major sell-off. And a lot of people made millions of dollars, but also a lot of people lost millions of dollars too. So obviously with this going up and down, that is very, very volatile. Okay. It fell all the way down to about, all the way down here to about $50 to $40 again. And then went parabolic again. Went from 40 to 50 bucks all the way up to about 180. Sold off, got more buying pressure, hitting highs here at around pretty much 300 to 350, sold back off all the way down to 120, then back up to 190. So a lot of people love to talk about this stock and a lot of people are investing in it, but is this company a good investment? Okay, the way I think of GameStop is a high risk, high reward play. The reason why I say that is because yes, GameStop, they are changing the company. They are changing the board members. They are going for more online. And I think this is all stuff that they should have been doing prior to the lockdowns and, all those stores closing. That would have been a lot better. But right now the valuation is somewhere around $8 to $7 billion. And for a company that only brings in, a couple $100 million, if that, I think the valuation is extremely high right now. And I think that when you invest into this, you have to have the mindset that if let's say we want this stock to hit $500 like it pretty much did here, a month or two ago, we have to have the mindset that for this to come up to 500, it could easily go back down to $40 or $50 a share before then. So that's why I consider this a high risk, high reward play. I think a lot of beginners and conservative investors should stay away from GameStop. I think the valuations are too high. They need to bring in more revenue. The company's losing millions of dollars. They're closing thousands of stores across the United States. I think the company's not doing too hot. And the only reason why it's up this much right now is because it's one of the most talked about stocks and everybody missed out on this huge play back in here and they don't want to miss out on another one. So we have a crazy high valuation, and with that, there could definitely be a crash coming very shortly, but also this stock could easily come in contact with $500 again. Who knows? I think the valuations are too high, so, beginners stay away from this. So what is my strategy for investing? The only way I am going to invest into this position, and I'm not even going to be investing 1% of my account into this. I'm probably going to be investing maybe 0.5 or 0.3% of my account because it's very risky. I would rather see you guys invest in the S&P 500 that on average has an annual return rate of 9.8% rather than a company like this. Let's look at the 3-year chart here so you can kind of get a good understanding of what's going on. So really, this stock had a downward trend 3 years ago. If we actually go ahead, we can't even, really look at it here, but it had a downward trend. It was, 22 all the way down to $2. So you guys can see that downward trend there. And then we did get some buying pressure. Looking at the earnings, we've had massive losses. A miss of $1.61, miss of $1.40, miss of 53 cents. this was the only decently earnings we had in the past quarter. I just think the valuations are too high right now. It's still on a downward trend. I'd rather see you guys invest in a solid company than something like this. But for me to invest, I want to make sure this is at least $40 to $35 before I hop into this again. And yeah, I could miss out on a massive move, and I'm well aware of that. But I would rather invest to a company that I personally think will dominate over the next 10 years than a company like GameStop. And that's just my opinion, guys. So I hope you guys enjoyed it. I hope you guys got something of value. And if you did, hit that like button and subscribe. I know a lot of people want the stock to hit 1,000. And, I'm sorry, but I just think the valuations are a little too high right now.